Hello and welcome to Bazaar Morning Call. I'm Prashant. With me, my colleagues Sonia and Nigel. Good morning, guys. Starting a fresh new week with positive cues, and I think we can say that with some confidence because Friday's session sort of continued the rally that we saw on Thursday. Thursday was that big 7% rally on Nasdaq. And Friday, we saw almost a 2% continuation on the Nasdaq once again. The dollar was down and basically everything went right on Friday as well. You wanted a continuation, follow through, you got it. The point is that after such large moves, naturally, you would look for signs of exhaustion. I mean, that's pretty natural. We'll see how that kind of pans out. There is a lot which has happened in the crypto landscape. Are there any negative spillovers? People are calling this the Lehman moment for the crypto industry. So that's something which bears watching. SGX Nifty futures in the last 40-45 minutes or so has come off a little bit, and we're expecting a flattish kind of start. We, of course, on Friday had a pretty large day as well. I mean, the Nifty, the Bank Nifty making a new high. So things went right. This morning, it's going to be a slow start, at least at 9:15. Guys, good morning.
Hi, morning, Prashant. Morning, Nigel. And that's not such a bad thing, right? I mean, given the week gone by was quite positive for equities, especially for the US markets. A little bit of a pause, a little bit of a breather is something perhaps the bulls would take with both hands. But the Nifty is getting close to record highs, and that's something that we're going to focus on. It's on the back of a global market rebound. Our markets are at a 13-month high. That's where we closed last week. And the gains have now been for 4 straight weeks running. So that's the kind of momentum our markets have seen. There's also been buying both from foreign and domestic investors on Friday. So FIs, there was a huge sum, almost 4,000 crores got pumped in. DIs saw about 600 crores or so. And the US markets had a pretty smooth run on Friday as well. Look at that. All across the board was green. In fact, for the week, the S&P 500 was up almost 6%. The CBOE volatility index fell quite a bit, which is a good thing. And now our sights are set on that all-time high of 18,604, which we hit way back in October 2021. We're just a smidge away from that. I guess it's just a matter of time. But the biggest cue for me, and I'm sure it's for Nigel as well, is the end of the earnings season, right? Tomorrow, earnings season comes to an end. So, but today, so many stocks in focus.
So you're just looking forward to this. Last week was the end of the week, you're just burning out. But good, Prashant, I'm sure you're tracking the EPS growth, etc. But me and Sonia are going to be celebrating the end of earnings season. It's been a rough one.
It's been a hectic one.
Tiring one, always, absolutely. And I mean, they come up so fast, right?
Yeah.
I mean, by the time one is finished, you're looking at the next one. No, absolutely. The new highs, as Sonia mentioned, will come. And the Bank Nifty already saw that on Friday. And of course, on the Nifty, we're not very far away, 250 odd points or so. Let me just quickly set up things. So we had the Wall Street rally continuing on Friday as well, with a near 2% pop. The S&P 500 was up about 1%. The Nasdaq specifically is giving very positive technical indications. So it's finished what is basically a double bottom. It's broken through a horizontal resistance, and it closed above the 55-day moving average. This is the Nasdaq Composite, which basically suggests a move all the way to about 12,227 to 12,270, which is about 7% from where the Nasdaq Composite is right now. The reason we are saying this is because the last time we had a move, that was in June, from the lows of June 2022, the low to peak move was about 25%. And that basically will get the Nasdaq Composite this time around to this 12,270 kind of levels, as I said, which is about 7% away from here. Remember, the S&P has had a little better, because Nasdaq, of course, was the one which was compressed quite a bit. On the S&P, similar kind of levels come in at about 4,200, which is not very far away from where we are. The dollar index fell once again on Friday. It was down another 2%. Last week, the dollar index is down Friday to Friday 4%. That is huge, right? I mean, that is a 3 sigma move if you have one for the ages in that sense. And I think there is perhaps a healthy debate about whether the dollar is starting to peak. And we'll kind of talk more about that. A peaking dollar is great news for emerging markets because that's one of the primary channels of inflows or outflows, depending on stress or relief. But, this week, after the CPI numbers underwhelmed, you will hear from a lot of Fed speakers, 14 Fed speaking engagements. The reason this is important is because somebody will come out and say varying degrees of hawkishness and dovishness, and the market will respond. It's something to really watch out for. The other big story, of course, is this China reopening. there are indications that zero COVID is kind of behind and they're going to gradually reopen. This is important because of a variety of things, but the most important way it affects us is it perhaps puts upward pressure on energy prices, oil prices, right? I mean, China has been out of the market for a long time, and if it is making a comeback and markets try and price that in, it's important for energy. On the Nifty, we on Friday closed exactly at the upper end of the broadening pattern, and the January 2022 high, which was about 18,350. I mean, the next targets are essentially the all-time highs. We can kind of be very specific about levels, but I would go with the broad level, which is the all-time high. Bank Nifty also made a higher high and closed above the previous peak, which was 41,948. So, although the Bank Nifty was closed in the middle of the range, but the close was a higher high, and the targets on the Bank Nifty stretch out to about 43,000 or so. It's going to be a slow start. Maybe wait out the first half an hour, 40 minutes, see how we start, and then maybe start to take positions once again. One thing has been absolutely clear. There is no point taking a counter trend kind of a move yet unless the market tells you that, which is not the case. The one big concern, which was the global concern, is also starting to fitter away right now. US markets are looking like they perhaps have a little more to go before this one peaks out. Nigel, what are you watching?
Well, guys, before we get to the market action, today is a very special day, right?
It's Children's Day.
Absolutely. Children's Day. Sonia's done, I think, an interesting chat
yes.
On Friday. So I look forward to catching that. But it's a very, very special day. So wishing all the kids out there. I don't think too many of you all are watching this right now. But all the parents, do something special for the kids. It's Happy Children's Day. I remember Sonia told me once when I joined Bazaar that I think one of the great market men told her that if you're investing in something, the best investment is invest in your children.
Yes.
And that's that stuck with me.
And don't extinguish the child in you, right?
Yeah.
I mean, don't let age extinguish the child in you. So Happy Children's Day to all of us as well.
Absolutely. All right. Well, that's about that. So let's get to the market action. Fabulous Friday is what we saw. You had the IT index as well as the Nifty Bank. Both of them, the pillars of the market, they did well. And when that happens, well, the Nifty did see a super duper rally. We were talking about that, 18,350 odd mark getting conquered. Well, on a closing basis, we closed bang in line out there. Institutional flows, well, the FI flows, they continue to remain positive. So 11 straight sessions is what you see in buying. 20,000 crores, $2.5 billion have come in. So the FIs, they continue on their buying streak. The DIs, they broke their selling streak, which is interesting as well, because for 10 straight sessions they were selling. That had to take a bit of a pause. The FI data and the FNO market as well, very, very encouraging. They added longs, they covered some shorts. We made this point. They added some shorts midway through the week last week, and they were forced to cover that out. Now the long positioning moves to around 62%. Even on the option side, they bought more calls than puts, and they wrote more puts than calls. And you like that data point that's coming in there. What were they writing? If looking at the options data, there is clear signs of writing at around the 18,200 and 18,300 put. Put it together, total open interest build-up out there was close to 90 lakh shares. Now, that's giving you a sense that lower levels will be defended. On the upside, though, it appears the bears, they were defending that 18,350 odd mark, and they were writing the 18,200 call. There was sharp unwinding that we saw there. Open interest was down close to around 60%, and now it seems the bears have shifted their defense to that 18,550 because the 18,500 call did see a fair bit of open interest build up. How do you approach the Nifty? Well, buy on dips. You shouldn't be shorting this market with the kind of data points you're getting in there. So it's a still uptrending market. However, I need to make this point: a pullback, some bit of consolidation will be par for the course. The base for the Nifty has moved up close to around that 18,000, 18,100 odd mark. But I won't be surprised in the next couple of days if we get that 100, 200 point odd pullback. So let's see whether or not that happens. For the time being, SGX Nifty suggesting a quietish start.
Okay, and there are plenty of earnings today as well, right? Just while we're on the subject of earnings, too many today. Key ones include ONGC, Grasim, IRCTC, Biocon. There's Bharat Forge, Apollo Tyres, so lots to talk about. And we'll keep our focus squarely on stocks as well. But first up, as we kickstart trade and the SGX Nifty indicates a bit of a pause today, we have a view coming in from Jonathan Garner of Morgan Stanley, who says that a new cycle favors emerging markets with lower inflation, a Q1 finish to Fed hikes, and easing US dollar, and Asia leading a global growth recovery from Q2. He sees 12% returns for MSCI emerging markets, and they are overweight on Korea, Taiwan, Saudi Arabia and Brazil, and they stay equal weight on China given the wide range of potential outcomes. Jonathan also says that they are tactically underweight India equities on relative valuations and technicals and expect it to lag any rebound from an EM trough. but look for entry points into a compelling structural outlook.
Well, let's get you some money market views as well. B. Prasanna of ICICI Bank says the dollar sold off sharply after softer than expected US CPI print, shaving off the fear of excessive rate hikes by the Fed. He says fatigue in dollar strength along with position squaring of speculative long dollar positions offshore helped rupee recover strongly. He sees more unwinding of offshore long dollar positions in the near term and expects the rupee to trade between 80.81 to 80 to 81.25 to a dollar, with the RBI smoothing volatility and looking for opportunity to recover lost reserves.
And on the bonds for today, you have B. Prasanna, who says that the pivot trade finally got some support from data, with the US inflation surprising on the downside and markets rallying on expectations of slower and lesser rate hikes. Back home, he says Indian rates rallied as well, particularly on the overnight index swap front, discounting lower terminal rates. He says bonds, however, would continue to be impacted by regular supply, expects the 10-year benchmark bond yield to trade in a range of 7.2 to 7.4%.
Well, we have a lot of stock-specific action for you, and we'll cover that in just a bit in our special Top 10 segment. We're looking at ABB India, InfoEdge, LIC, and Glenmark. They are stocks that are likely to react to positive news flow, while you have Auto Pharma, Patanjali, Z Entertainment, Delivery, Manappuram Finance, and Natco. They are stocks that could open up in the red.
Rajat Bhattacharya, a senior investment strategist at Standard Chartered, is joining us right now to take some questions. Rajat, great to have you with us here. Thank you very much. So we had this very large move on Thursday, follow through on Friday. Is there more to go in US equities, or do you think the rally could be punctured with all of the Fed speakers who will come out and say one thing or the other? Your sense?
Hi, Prashant. Yes, as you've signaled there, 2 to 3 sigma moves, last week, and those are, as that by definition is a huge move. So some kind of a consolidation is in order, and to your point, a lot of Fed speakers are lined up. We've already heard from some of them over the weekend. They're all cautioning against that. This is not the pause in Fed rates, right? So this is a slowing down, which Chair Powell signaled to us in the last meeting, that he's actually seeing a possibility of a slowdown in the rate hikes. So what we are really looking at is a 50 basis points rate hike in December, and then we will see. It's going to be data-driven point, So there are 2 more data points to come through before that December Fed meeting. So one is the non-farm payrolls at the end of this month, and then you have the CPI for November. So those 2 again will show how far we have progressed. The jobs data is still very hot. The job market is very hot in the US. But CPI, as you mentioned, slight slowdown coming through in the inflation. But mind you, we're still talking about, if you take month on month is 0.3%, which is well above the Fed's 2% target. But there's a likelihood that the inflation has peaked, and that is helpful. We need to watch some more on that.
Okay, so 50 basis points rate hike is what you're expecting from the Fed in December. Got that. Rajat, good morning. Are you getting a sense that the worst of the rate hiking cycle is now behind us because of the reasons you referred to, whether it's cooling off of inflation or, growth continuing to pick up? And if yes, how do you approach risky assets like equities, especially emerging markets like India?
Yes, Sonia, I think we're closer to that peak, right? So now the Fed terminal rate, which is the one we keep watching, the terminal rate where the Fed is likely to end this cycle in rate hikes, that has now come off to 5%. It used to be 5.25% before the last CPI print. Now, if you take 5%, and if you're factoring in another 50 basis points of rate hikes in December, that would take us to 4.5% by the end of this year. And if the terminal rate is 5%, you've that much little more to go. So we are close to that peak of rate expectations. But as I said, the inflation is going to be key from here. The broader underlying CPI, the core inflation, is still pretty solid. If you take out the extremes, we are still talking about 7% year on year in terms of the overall index, and almost 6% core CPI. If you take out the extremized data points, so which means that this will be a deciding factor. But how do we position for that? in the next few weeks, you're probably going to see the possible continuation of this rally that we're seeing in risk assets, especially you mentioned growth stocks, which were battered down by high rates. But over the longer term, I think the way to position is, again, the emerging markets, Asia ex Japan stocks are really appealing. I've mentioned in this forum time and again how beaten down Asia ex Japan stocks were. China, for instance, we've seen the run up. China stocks were up almost 18-20% last week. And that's for a reason, because they were so beaten down, nobody was owning it. Yeah, this is one market. It reminds me of that famous phrase that the financial markets, the stock market is one place where assets go on sale and nobody turns up. And this was the market that was waiting to be bought. A slight turn, and now you see more. Over the weekend, we've seen China ease further policies towards real estate, and that should help as well.
Yeah, that's right, Rajat. And some of those stocks, they're flying away. You know, the real estate stocks, 30, 40, 50% as well higher. I'm just looking at a couple of those mainland developers out there. Country Garden is up 50% as we speak. Rajat, but, you know, just stepping aside from this argument about emerging versus DMs, etc., I wanted to ask you about the cryptocurrency market. That's having a Lehman moment out there, or worse than that. We haven't seen any kind of rub-off on the equity markets. Do you think that that is unlikely to happen? Because at one point of time, no guts, no glory. But now it's turned around. What's your take?
Yeah, we've always been very cautious on the crypto market per se. The crypto idea is going to be long-lasting, but those things like Bitcoin, and we've been always cautious. So we haven't really seen so far the spillover into this market, but we have to watch the exposure of various agents. So far, I don't think there's going to be a huge spillover, but we need to watch this space. We don't know what's lurking there because of the nature of the crypto currencies themselves, right? So they don't have the financial exposure, so to speak. They were alt financial market, so to speak. So it's very opaque, and we need to watch that space.
Okay, well, Rajat, thanks a lot for joining in and giving us your quick thoughts on CNBC-TV18. We appreciate it. That's the word coming in from the global expert. There's a 50 basis points rate hike in December that could come from the US Fed, and it's perhaps a slowdown in the pace of rate hikes, but not a pause for sure. Let's slip into a quick break on that note. On the other side, our entire research team will be with us to give us all the stocks to watch out for in trade this morning. Stay tuned. Good morning. Once again, this is Bazaar Morning Call. Hope you're having a swell morning of trade. For now, the SGX Nifty is indicating that the start will be absolutely quiet. But Asian markets are looking pretty good. Global markets, the US was in good shape. So let's see if we have a date with those all-time highs this week. But let's get straight to individual stocks. There's so many to talk about. Vahishta, my colleague, joins in first up to talk about ABB's numbers. Vahishta, over to you.
Hi, Sonia. Good morning. Well, for ABB India, operationally in-line results versus the estimates, but the sales growth, though, was a little below the forecast. The order inflows have come in at 38% year-on-year growth. Order backlog is also strong at 6,500 crores in Q2. The process automation segment has won multiple orders from large players in the steel, cement, and the gas segment. The motion business performance was also supported by good contribution from the channel business, from exports and the package orders for motors and drives. The company is quite optimistic, and they say that they are well placed to benefit from the Government of India thrust on infrastructure development, rail, power sectors, and the ongoing capex cycle. I would go with a green on the stock.
All right, thanks for that, Vahishta. Well, Rima standing by to tell us about Info Edge. Rima, the numbers look good.
Indeed, the standalone revenues above 50% for the fourth consecutive quarter. Revenues have inched up by 51.2% on a year-on-year basis. EBITDA margins have expanded both quarter-on-quarter and on a year-on-year basis. So EBITDA margins at 34.5% are higher compared to 30% that it had same time last year. And if you compare it to the previous quarter, Q1 FY23, it's also an improvement of 240 basis points. One of the big drivers for Info Edge has been their Naukri or their recruitment business, led by very strong IT hiring. So recruitment revenues are up 63% year on year, billings are up 65%, an indicator of future growth, and EBITDA margins are above 60% for the recruitment business. The only fly in the ointment is, in the press release, Hitesh Oberoi acknowledged moderation in hiring in the IT vertical. And remember, that contributes nearly 50% of the recruitment revenue. So does that mean that, in the future, in the next couple of quarters, this revenue growth rate will slow down? Remains to be seen. But for now, Q2 numbers look very good. Back to you.
All right, Rima, thank you very much for that Info Edge and focus. Now, Aurobindo Pharma has been in news for the wrong reasons. Ikta is here with more on this developing story. Ikta, hi, good morning.
Thanks for that. Well, further disappointment which came in for Aurobindo when it came into its Q2 performance. Revenue was down 3%. The street was anticipating around a 5 to 6% growth. Margins disappointed. It came in at a multi-quarter low of around 13.7%. This is versus 15.5% in the previous quarter. And the revenue missed estimates as well. One of the key reasons for the miss overall was because of the US revenue, which is bulk of their sales, which came in at $331 million. This is versus estimates of $382 to $388 million in terms of a range, and versus $386 million that they did in the previous quarter. Now the stock is already at around 10 to 11 times FY24 estimated PE. So the valuations are completely low, so it might look comfortable for some, but the negative news flow with regards to the director being arrested just recently is likely to weigh on the stock, though the company has clarified multiple times that it is in no way linked to Aurobindo Pharma's operations. But today, conference call at 8:30 a.m. We'll hear more from the management, but based on what they've reported, it's a red.
Okay, it's a red over there for Aurobindo Pharma. The stock has been under pressure in any case. Mangalam is joining in to tell us about Patanjali Foods and how the numbers look there. Mangalam?
Well, it's a red for Patanjali Foods as well. And this despite a strong jump in the company's revenue. The reason why I say that is because there's been a sharp contraction in margins led by the oil business, something that we saw in Adani Wilmar as well. The reason why the revenues did well and the margins were supported was because of the food business consolidation. Remember, on July 1st itself, they consolidated Patanjali's food business for a slump sale of almost 690 odd crore rupees. 42% jump in the company's revenues. EBITDA declined by 41%. That means margins came in at 2.2% versus 5.5%. And as a result of which the net profit, fell by about 32 odd percent. In the oil business, we saw a revenue growth of 17.5%, but the EBIT loss came in at 471 crores. This compares to the profit of roughly 200 odd crores. The food business, of course, did well on account of the consolidation. The company said that inflation impact on operating cost added further pressure on margins as they were also sitting on high cost inventory.
Okay, all right, Mangalam, thanks for that. Well, Bahista is back with us to tell us about Zee Entertainment. Bahista, how were those numbers?
Hi, Nigel. Well, it's been a mixed bag, to be honest. The results have met the street expectations. Advertising revenues were also up 7%, which was on the expected lines. The advertising environment has been subdued, so remember that. Subscription revenues improved 4% on year-on-year basis, which was better than the CNBC-TV18 poll. The company also expects the full process of the merger to be completed by the end of FY23, though I would still go with a red on the stock today because the management does not expect any normalization in margins in the remaining part of FY23. The Q2 margins were at approximately 14%, which is nowhere close to the pre-COVID margins of in excess of 20%. Also, there's been an overhang of NTO 2.0, which still continues due to the difficulties that they face in maintaining the consensus among all the participants of the value chain, which includes your broadcasters, distributors, and the others. Number 3, EBITDA losses in ZEE5 have widened further to 277 crores, and they expect the same run rate in the latter part of FY23. Due to these reasons, I would go with a red here.
All right, Vaisha, thank you very much for that. Delivery reported numbers as well for the second quarter. Mangalam is here with more. Mangalam, hi, morning.
Good morning. So for delivery, the weakness persists even as losses have narrowed year on year. If you just take a look at it, revenues have grown 20% year on year. Quarter on quarter, that number is just about 2.9% growth, in line with what the company had guided for in their second quarter update. EBITDA loss at 138 crores compares with a loss of 518 crores, but gross margins have contracted on a year-on-year basis as well, and the company continues to post a net loss on the bottom line. Importantly, the only solace that one has is that shipment volumes grew by 80% over the previous few weeks during the festive season. That is one. And secondly, The problem with delivery would be that, on 19th November itself, the pre-IPO lock-in ends. So there would be some supply coming in out there as well. So that would limit any sort of upside that we may see the stock in the red.
Okay, see the stock in the red. What about LIC? Surbhi is here to tell us more about that. Surbhi, over to you.
LIC has posted really strong growth in their net premium collection and their value of new business. The net premium was up 26% on a year-on-year basis at 1.32 lakh crores. Their expense of management ratio has come in higher at 18.24% versus 15% same time last year. Their solvency has also improved on a year-on-year basis. Their PAT has come in inflated, and that is because of a massive gains from changes in their accounting policy related to their investment income. The annualized premium equivalent APE has grown by 45% sequentially. Their value of new business is up 63% sequentially, leading to a margin expansion of 160 basis points, which is coming at 15.2%. The embedded value has come in at 5.44 lakh crores. Overall, really good numbers from LIC. Just some one-off items in their P&L, which we will get more clarity on in their con call today.
We look forward to that. Thanks so much, Surbhi, for that. Well, going back to Ekta, what about Glenmark Pharma? How are the numbers?
Not bad. Revenue was up 7% better than estimates. Margins also in line with estimates. Profit also above estimates. India did well. Double-digit growth despite a COVID-19 quarter same time last year. So reported numbers was up 13% year-on-year. North America also better than expectations. $95 million odd is what they did versus estimates of $90 to $100 million versus $86 million in the previous quarter. 9:30 a.m. is when there is an investor call.
All right, Ekta, thanks very much for that. Manappuram Finance is the other one which will be in focus on earnings. Muthoot, of course, had reported earlier, disappointing set. Abhishek, tell us more.
Well, Prashant, gold financiers, NBFCs are losing business to the banks, which is continuing even in this quarter, as we had highlighted earlier as well. So the gold tonnage is at 5-quarter low of about 62.7 tons with Manappuram, or the second lowest that you are seeing in last 19 quarters. The AM growth is tepid given the fact that it's grown by 8% YOY. Q2 FY22 was a favorable base in terms of AM growth. Despite that, only 8% growth, which is on the weaker side. The gold loan AUM has declined by more than 6% on a sequential basis, which means that there has been massive auction in this quarter. So the profitability has jumped on account of auctioning. Net interest margin has improved to 15.23% versus 13% in the previous quarter. However, on the flip side, their MFI NPA actually increased to 8.8% when compared to 7.7% in the previous quarter. Even the gold portfolio saw a bit of deterioration with gross NPA at 2% versus 1.4% in the previous quarter. Overall, the NII growth was 12.4% YOY and about 17.1% sequentially, while the profits jumped up by 17.5% YOY and about 64.3% sequentially. Back to you.
All right, thanks a lot for that. A quick comment from Ekta on Natco as well. Ekta, how did it look?
Well, Natco, actually the news is Bristol Myers Squibb, which is basically the innovator of Revlimid, along with Natco and Teva, which are the two partners together who have launched Revlimid generic, the blockbuster cancer drug, as a first to file in the US, have been, in fact, there's been a lawsuit put by Walgreens on all three of these companies together, and that would be an overhang probably on Natco today, because you generally don't know how things go with this kind of a lawsuit. And separately, we do have other companies which had filed or which had settled with BMS, the likes of Dr. Reddy's as well as Sun Pharma and Cipla. So maybe they could be in focus on account of a possible spillover effect on these companies as well. Natco expected to probably be in the red today.
Okay, all right. Thanks for that, Ekta. Well, let's do a quick recap then of all the top stocks we just covered. Stocks with positive news flow include ABB India, Info Edge, LIC, and Glenmark Pharma. While stocks with negative news flow include Auto Pharma, Patanjali, Z Entertainment, Delivery, Manappuram Finance, and Natco.
All right, well, let's talk to Ashok Leyland now. The company posted a solid set of Q2 earnings, clocking in a beat on all parameters. The revenues jumped 85%, margins expanded to 6.5% versus 3% last year, and brokerages have upgraded the stock. Gopal Mahadevan, the CFO and whole-time director at Ashok Leyland, joins us now. Mr. Mahadevan, it was a very good set of numbers. Thanks a lot for joining in on the show. But this is also on the back of a low base last year. So just want to talk about what the steady state of growth is for the commercial vehicle business in the second half of the year.
See, I'll put it this way. On an annualized basis, I think the research reports that all of us are getting show that there'll be about 22 to 24%. And I think there is still a lot of growth left in the commercial vehicle industry. Simply because what has happened is after 2019, the industry was a little flattish, and after that, it has degrown severely. Whereas the economy has started to grow. I mean, India is one of the higher growth or highest growth economy that the world is looking for. And more importantly, you're seeing a lot of infrastructure spend that the government is putting in, right? So we have seen real estate actually coming back, some of the commodity sector coming back, road building, infrastructure going up. So, this requires a lot of commercial vehicle support, in this growth. It's a direct outcome. The second one is the pent-up demand itself, which I mentioned about, which I won't repeat. From our perspective, if you look at the growth, like you rightly said, we're very satisfied with the growth in the current quarter, not just merely because of the 6.5% EBITDA that we posted, which is possibly one of the higher ones, but also because we gained market share by nearly 9%. So that was not based on industry growth; it was based on our market share growth. So our share of the market is now, for the third quarter in a row, is about 30%. The second part of it is the growth in the market share has been pan-India, which means we have grown in all the zones, north, east, west, central, and south, which again has been, which kind of exemplifies two things. The Avatar range of products has been very well received for their robustness, for their mileage, driver comfort, and total cost of ownership. So the feedback on the vehicle has been truly very positive. And that has also helped, but that has been a pull from the customer, if I may say so. And I think the initiative that the company has taken in kind of refreshing the network has also paid off.
Second quarter volume growth was 64.5% year on year. You're saying on a steady state, industry can grow 20 to 25% for the full year, and for next year, FY24?
FY24, we'll have to wait and watch how FY23 pans out. But I believe that, like I mentioned, that there is enough steam left in the, the commercial vehicle industry to grow in 24 as well. And if it does happen, I mean, I'm not very aggressive. We are not normally very aggressive or forward-looking. But if you see, a number of reports also state that the previous high of, 394,000 units possibly will get surpassed in FY23-24.
But I need to probe you a little bit more. Do you see your operational performance improve from here on? For the last quarter, you did around 6.5%. Is it possible that you have your eyes set, say, on moving towards double-digit margins?
Okay, let me put it this way. Instead of talking about second half, let me tell you what we are what we would want to see in the medium term, okay, over the next 1 year, 2 years, etc. We would want to get into double-digit margins, that's for sure. And I think it's possible if demand continues, if the GDP continues to grow, if there are no major shocks in the global economy, no major wars which shut down the world, India continues to grow, and commodities, reach saner levels. I think it had gone very high, and we are finding that commodity prices are coming down. And the more important thing is, if the industry gets into the mode of value selling, which means sell to a customer based on the features of the product and the capability of your service, instead of just discounting the product, the industry will actually move to a growth, not only a growth phase, but a profitable growth phase, which is exactly what we are attempting here in Leyland. We have been raising prices in Q1. We have done that in Q2. We have done that even very recently in Q3 as well. We are trying a bit to kind of ensure that while prices have to be raised in tandem with the cost of the product going up, we also are providing services and offerings which delights the customer.
You are sounding very optimistic. So you were telling Nigel that perhaps double-digit margins is possible by FY24. You want to take that a bit forward? I mean, are we looking at that as a possibility in FY23 itself, given the way the economy and the industry is panning out?
I don't know. I don't want to give a forward-looking statement now. FY23 seems very tough. But let us see. I mean, I would say that definitely, like I mentioned to you, I'll repeat it, and to you and for the benefit of viewers, over the next maybe 1 or 2 years, we would certainly want to get into double-digit margins. The faster, the better.
Okay, so over the next 1 to 2 years, double-digit margins coming in from Ashok Leyland. That's the big headline perhaps our viewers would, want to respond to. But can you tell us about the nature of the orders coming through between MHCVs, LCVs, tippers, multi-axle vehicles? You did mention that infrastructure spend is picking up, but where are you seeing orders coming in from? And also, are these for the existing infrastructure orders or are orders coming in for fresh projects? Just trying to understand whether there's a pickup in the capex cycle.
Yeah, you see, what is happening is there is growth across the industry. You're seeing it in tractor trailer, multi-axle vehicles. Tippers have, suddenly has a huge demand and then flats out a bit and again then starts because tipper is directly related to infrastructure, right? Now, what has happened over the industry has been that there has been, like you rightly mentioned, there has been a pent-up demand that has happened. See, after FY 18-19, there has not been any growth at all in 19-20. And then from 2021 onwards, you had COVID. And then last year, the demand started to slowly come in. And what we believe at the moment, a lot of things we are just kind of piecing together the various components of the image that we see, is that we had the axle load norms revised about 3 years ago, right? 3-4 years ago. And we believe that the additional capacity that was created because of axle load norms is slowly waning out, and we don't have that additional capacity now. Finally, I would also say one more thing. I think ESG has become very important. As much as the world is moving towards EV, we must also remember that BS6 in terms of pollution is significantly lower than a BS4 or a BS3 or a BS2. So as people are looking at greener vehicles, not only will the demand for EVs start to slowly go up, we will also see that there is a shift from the BS1 and the BS2 vehicles moving in quickly to BS6, because that's what end customers would want. We believe that this is a confluence of all of what, I tried to kind of put together for you.
Mr. Mahadevan, is the problem of discounting to gain market share behind? You did mention that you want to do what you describe as value selling. So, and you've been raising prices. The industry phenomenon of discounting, is that also behind us broadly?
Unfortunately, the discounting continues. I mean, it's not come off, but it's kind of flattened. It's very difficult to put a percentage because it depends whether the pricing. See, it all depends on the geography. It depends on the type of vehicle, whether it's an ICV or it's a 49-tonner. Typically, I'll tell you, in this industry, the rule is the larger the tonnage of the vehicle, the better is the margins. Okay, so I think the challenge is actually in the ICV segment, where the margins are lower. And surprisingly, I'll tell you, but after that, when you get into light commercial vehicles, the margins are significantly better again. So this whole MHCV bit is actually the margins start to deplete as you get into the ICV segment. But having said that, what we do, and I have been mentioning this to you as well over the past few years, what we look at Leyland is the net price realization. So we keep raising the prices and we see on a net basis, are we improving ourselves or not? And over the last few quarters, we have been able to achieve that. And we will continue to pursue that strategy. Ultimately now, this is not like a car. This is an industrial product. It's a commercial product. What the customer today is looking at is not just the initial price. They are looking at the total cost of ownership. What is the quality and the ability of the vehicle that we are buying? What is the network and the service capabilities? How are the relationship with the dealers? How are the dealers treating the customers? So there's a whole complex, range of catalysts that actually drive a sale. So and what are the solutions that are coming out? Today, the vehicles are far more intelligent than what they were about even 3-4 years ago. So there's a confluence of factors that actually drive, the purchase of a vehicle, and we are trying to understand this much better and not just focusing on, let me discount it a little more and sell it, because that is not going to hold as a long-term strategy.
Well, Mr. Mahadevan, given that demand is very, very strong, would you look at raising your capex guidance? I think earlier you had guided for around 750 crores this year. What's the update?
See, for the year, I can share with you that we had initially mentioned that we would have a capex of about 750 crores. We are actually possibly looking at a capex of only about 600 crores. The capex for the first 2 quarters put together is only about 214 crores. We have sufficient capacity. What we are working on is, instead of putting in raw capex, what we are trying to do is to improve productivity. and then realigning manufacturing. There's a lot of work that our manufacturing guys are doing at the back end to actually improve the throughput. So we are going to do that. At the same time, let me assure you that we are not going to lag behind in capex. If we need to put in the capex, we will do that. But this will happen in stages. It won't be a greenfield or a brownfield. It will be more and more of balancing capex that we need to do to enhance, debottleneck the manufacturing facilities as we move forward.
Okay, Mr. Mahadevan, always great speaking to you. Thanks a lot for giving us some important numbers and all the best for the second half of the year. That's Ashok Leyland, very good numbers, and the management saying that they hope to do double-digit margins by FY24, and they are also looking at 22 to 24% growth for the commercial vehicle industry this year. Demand has been very strong. We'll pose all of these questions to our next guest. Prakash Diwan joins in on the other side for some stock talk. Keep it with CNBC-TV18.
Welcome back. You're tuned into Bazaar Morning Call. You're on CNBC-TV18. Well, the SGX Nifty was quiet just a short while back. In the last 5 to 8 minutes, it suddenly spiked up. So maybe we are not bracing for a flattish start. Maybe we'll start off in the green. That said, there'll be plenty of stocks that'll be moving around. So let's get chatting with Prakash Diwan, who joins us to help us out with just that. Morning, Prakash. Hope you're having a good Monday morning. Well, Prakash, we just were listening into the management of Ashok Leyland. And they sounded rather optimistic with regard, to demand, with regard to profitability as well. Your view on the stock, they've gained market share as well, big time.
Oh, absolutely. Morning, Nigel. So I don't blame him. The optimism stems from the fact that the numbers are painting a very, very rosy picture in terms of where they're headed. And in fact, just to tell you, the interview with him was a masterclass in commercial vehicle business understanding. So I think he's touched upon a lot of things. Of course, we'll have to wait for the margin expansion that we're talking about into that double-digit territory, and that will put the put the company into a very different orbit, right? What's interesting is the data that's coming out. Whether it's the industrial production numbers or the inflation numbers, all segments of the economy that are contributing are related to areas where Ashok Leyland would get potential sales. So mining, for example. Or infrastructure or civil construction. These are pockets which need a lot of vehicles which only Ashok Leyland masters in delivering, right? So while the Mahindras and the Tatas have taken a little bit of a softer stance towards their commercial vehicle portfolios and focus more on PVs, Ashok Leyland is a pure CV player, and that's where it's benefiting. The market share could probably strengthen even forward. I think it's a stock that has been in the promising zone since the time it was in that 130, 135 territory and it crossed over. I would believe it would probably continue to do well, and you'll see some more serious allocations come into the stock. So very, very positive. And then most of the expectation is to have a target of about 177, 180s. That's the zone that I'm reading about. But I would fully concur with the fact that it should look up very positively in the next 6 months itself.
Okay, very positive. In fact, the management body language was also the most positive I've seen in a long time. So I guess that corroborates with your view. Prakash, good morning. What's happening in the pharma space? Across the board, we're seeing very disappointing numbers. I mean, Aurobindo's margins are at a multi-quarter low. Alkem lowered their FY23 margin guidance. What do you do if you own stocks like this?
Good morning, Sonia. So, I think pharma is going through a little bit of a sorting out or a sifting that's underway. Companies that have invested a lot in businesses that could kind of be the revenue streams of the future are the ones that will benefit. So look at Cipla or look at Sun Pharma, and you'll see a very different picture. Even Lupin, for that matter. I mean, the kind of improvement that we've started seeing. So what's going to happen is the big boys are going to get bigger in that sense and get stronger is the word. And Aurobindo has always been very, very volatile in terms of what it can produce, what it can deliver. So I'm not surprised at the erratic nature of their earnings. But yes, it's been disappointing with some of the other names like Shilpa and all. The margin erosion is really significant. So you will see this happen with the companies which have very narrow portfolios. Whereas and today, of course, there's some bad news that even NATCO is going to be looking at. I mean, you don't trust these antitrust lawsuits. I mean, these are black swan events potentially for a lot of small companies. So that's the whole climate. But you will have to look at some of them which have invested in the past, which have gotten over the bottoming out of the pressures on the US markets, and that's exactly where the pocket of promise lies. So I think if you stick to a Cipla or to even Lupin now, as I'm saying, the improvement is stark. It will probably continue to deliver, and you'll probably have to sort out from the smaller names.
Okay. Prakash, briefly, two areas. One, of course, is 50% of the Nifty's rally on Friday was attributable to HDFC and HDFC Bank. Do you see more there? And the other is IT services, which it continues to do well as the Nasdaq is pulling back nicely. Your view?
Good morning, Prashant. So, I think the HDFC Twins performance on Friday was a celebration of the MSCI announcement in terms of, the relook that MSCI is willing to put in terms of, their inclusion, but I mean, their weightages. But, I told this on Friday as well. There's no point celebrating that because the fundamentals have to take, come center stage, and that's going to happen very soon. But you have to give it some time. The best time to look at these would be on bad days when things look down and they are underperforming, nobody's interested. So that, temporary technical correction or bounce back has already happened. You will get better opportunities to it because fundamentally there's so much promise, provided you're willing to hold on post this entire merger happens. On the Nasdaq related bounce back, Prashant, I don't think we should correlate that to our and extrapolate that to our companies here in India because for us the more critical thing is the services, the expansion of services contract continuation out there, and that's going to be question that will come into a question only post December. So somewhere around Jan is when the time of reckoning will happen for the IT companies. This was more of a feel good factor that Nasdaq bouncing back. Let's look at our companies as well. But some of them technically and fundamentally probably will offer you much more promise, and then that's in the mid cap IT space. So that's where a little bit of a bounce back would continue. But I would wait for January to make a serious allocation to that sector in terms of whether it's bottomed out or not.
Okay, all right, Prakash, request you to stay with us. For the time being, we'll slip into a short break. You come back, we'll continue our chat with Prakash. We'll also be joined by Sudarshan Sukhani and Mitesh Thakkar. They'll be giving us their market call.
Okay, welcome back. 8 minutes to go for the pre-open session. The SGX has perked up a little bit, not by much, but 14-15 points higher as opposed to flat earlier. Sudarshan Sukhani and Mitesh Thakkar are with us with what they make of things and how they would want you to set up your trades. Gentlemen, good morning. Great to have both of you here. New week. Sudarshan, let's begin with you. How are things looking?
Well, good morning. Usually we talk about just one day on the Nifty and the Bank Nifty. Earlier we used to have a slightly longer term view also, so I'll do that today. The Nifty is on the verge of confirming a large bullish pattern, weekly head and shoulder. That means on the weekly chart, on a much longer period chart. And that gives us a target of about 23,000 in the next 1 year or so. Now, nobody knows the future, but that's what it shows as of now. So the point is that traders should try to be on the long side of the market as much as possible. Even if you send some small short trades on the short side, it's better to be with the bigger trend, which is up. Now, for today, the same view applies as it applies for the next 1 year. The market is on a roll, so wait for a significant dip and buy. There's no sense in buying after a very big rally on Friday and a small gap up today. These things cool down and consolidate, but don't think of going short. Look for a small dip of 100 points from the opening price and then go long.
Sure.
That applies to the Bank Nifty and the Nifty both.
Okay, got that. So go long. Mitesh Thakkar is also joining in. Going short, of course, doesn't make sense given the uptrending market, Mitesh. But is this a time to go long? And what are the levels that you're looking at next? All-time highs this week?
Morning, Sonia. My sense is that we will definitely trend higher in the coming few days. Now, the reason for this optimism is the fact that we've had some kind of a breakout in the sense that yesterday or Friday was the highest weekly closing which we got ever for the Nifty. Though I think the highest daily closing is about 18,477. That remains a mild pivot. But the structure of the medium-term charts has improved dramatically, as Sudarshan was also highlighting. Now, with this kind of scenario, when you've already breached the weekly pivot, the idea is that I think we should definitely be preparing for higher levels to come in the coming few days, and therefore trading should be on the long side. What will be very interesting is that the gap up which we got on Friday, I think that becomes a very strong support area. And that started at about levels of 18,100, 150. So that becomes a kind of positional stop loss. Till that is not being violated, I would maintain a very, very positive bias on the Nifty. And in the short term, look for 18,600 to be recaptured, and possibly this time the Nifty will be stable over there, even head towards 19,000 in the coming few weeks.
Okay, all right. Hi, Mitesh. Morning. You've given us a call on the index. Fill us in with your picks as well.
Yeah. Morning, Nigel. It's an IT heavy day for me. In fact, the Nifty IT index had a very strong breakout in the last couple of days. Many IT stocks are looking very positive. So I have 3 buys from the IT side. Coforge is a buy with a stop at 38.50, targets of 4,000 here. L&T Infotech is a buy with a stop below 5,000 for targets of 5,200 in the short term. And FSL is a buy with a stop at 106 for targets of 115. The solitary sell call is HUL with a stop at 25.25 for targets of 24.60.
All right, Sudarshan, what about you?
Well, Mitesh is right. The IT index as IT stocks are showing very interesting patterns on the upside. TCS is a buy with a stop under 32.50. Just to clarify, you know, HDFC was showing this bullish pattern before it break out. It had come in my buy list many times prior to the breakout. TCS is showing a very similar pattern. That should be interesting to watch. So that's the buying opportunity. JK Cement is a buy with a stop under 27.25. Cement, as I've explained earlier, should do rather well. Jubilant Foods is an intraday short. Short selling should be done only intraday with a stop above 575. And Canfin Homes, which actually went to sleep for the last 1.5 or 2 months, is now waking up. It's a buying opportunity. It's a buy on dips with a stop under 510.
All right. Well, Sudarshan, Mitesh, thanks for that. Very helpful. There's some stock ideas. Let's slip into a quick break. On the other side, we'll come back with the pre-opening rates. Also, we have a big management waiting by Satish Pai of Hindalco will be joining in to discuss their Q2 earnings. Stay tuned.